The FDIC is running out of cash, and it may hit up the nation's biggest banks for more to shore up the dwindling deposit insurance fund. Bloomberg's Lizzie O'Leary has that story for us from Washington this morning. Good morning, Lizzie.
Hey, Eric. Well, we've seen news reports this morning that indicate the FDIC could ask banks for up to 3 years of fees in advance, generating tens of billions of dollars. The board meets at 10, and it's been wrestling with how to strengthen the deposit insurance fund. That pays for bank failures. The fund sank to $10.4 billion at the end of June. That's the lowest it's been since the savings and loan crisis. Chairman Sheila Bair has been walking this fine line between trying to reassure depositors and at the same time pushing for a funding solution.
Nobody's ever lost a penny of an insured deposit, never will. We have the full banking industry backing us and the full faith and credit of the United States government behind that. It's really about funding mechanics and when banks pay and over what period of time.
So there are essentially three options they've had on the table. Number one would be levying a special fee on banks. They've already done that once this year. The banks did not want to be hit up again. Two, borrowing from a line of credit at the Treasury Department. That line of credit was expanded by Congress. Or charging banks their future fees now and then letting them not record it on their expenses until the first quarter of 2010. Banks liked the idea when it was a one-year charge since they didn't have to book it till the beginning of next year. 3 years, banks could be complaining a little bit, saying that's more onerous. Bank consultant Bert Ely says that the FDIC has certainly been getting the message from Capitol Hill not to do another special assessment now would just be too tough on struggling banks, especially community ones. And then borrowing from the Treasury, that could be seen as another bailout. So they're trying to walk a little bit of a fine line here, but certainly the fund does need the money. Remember, 95 banks have failed this year, including Atlanta's Georgian Bank. That one was closed on Friday. Compare that to 25 last year, only 3 in 2007. Georgian Bank alone costing the fund $892 million. Deirdre.